You should have been waking up to the non-farm payrolls data. No, you're not. Day 3 of the shutdown, and nothing sharpens the mind more than the risk of losing your job. And for politicians, taking the blame for a shutdown, a furlough, and maybe the risk of a permanent job loss, that's the prospect for the Democrats right now. And the President of the United States, he's ratcheting up that blame game.
Well, there could be firings, and that's their fault. And it could also be other things. I mean, we could cut projects that they wanted, favorite projects, and they'd be permanently cut. So you could say, a lot of people are saying Trump wanted this, that I wanted this closing, and I didn't want it. But a lot of people are saying it because I'm allowed to cut things that should have never been approved in the first place. And I will probably do that.
We understand the president is not just considering furloughing 750,000 federal employees, but the prospect of thousands of permanent job cuts. This is brinkmanship at a new level. Funding being withdrawn from certain favorite Democrat cities and projects. Stock markets around the world didn't even blink. We're up for the 6th day in a row. Records abound in the US equity market. And my conversation with Goldman Sachs yesterday made it really clear. This is not a market you want to be on the wrong side of. So what is the hedge of hedges? Well, for family offices, yes, it's still bonds. But what next for gold?
If you took 1% that's in US Treasuries now and put it into gold, that would lead to a $5,000 price on gold. I'm not suggesting that's going to happen, but I am suggesting that, we do have a government shutdown right now in the United States. And so if we see some money moving out of treasuries to gold, that's supportive as well.
Do you think gold is now a more substantive hedge to risk relative to treasuries? Because that's one of the debates. You've got cash, you've got gold, and you've got treasuries. And they all have taken on a different meaning. So where is gold in that range of hedges?
Yeah, so actually in our report, gold comes next after treasuries actually, so people still have treasuries ahead of gold. So I think it's a combination, and what I would say about gold is that it tends to be for clients a bit more of a tactical trade. We don't have commodities in our asset allocation, and if you look at the exposure to commodities in the report, it's still just 1% versus what cash and fixed income look like. So I still think treasuries wins out there. But it's hard to ignore the performance that we've seen in gold. And I think people are using it as a combination of tactical and thinking about, look, if you have fears, do you want to keep a small portion of the portfolio in gold as, a bit of a means of safety?
Sarah Nason-Tarajano there of Goldman Sachs, up for the 7th week in a row. It's a tactical position. But in the vacuum of information with no non-farm payrolls, a shutdown which is said to endure into next week, that raises the risk of perhaps a market accident. What next for gold and the rate traders?